Hey folks, this is Doc's Market Minute for Thursday, June 4th. Just a quick video today as we've gotten some selling coming in from overseas. This started in Europe this morning with looking like Greece is not going to be able to make their obligations, and that has led to some weakness here in the States, as well as the fact that we have the jobs report coming out tomorrow morning, and we may be seeing an effort by the market to discount what might be a lousy report. Now, the last time that came out, it was 220K right down the center of the fairway. If that happens again, then we might see it bounce tomorrow. We may see a little bit too much negativity coming into the market, but we do have a minor sell signal here, is that we've lost so far intraday the 2100 level, and so that creates this lower high and potentially a change in polarity to the downside. Now, that's not the end of the world, because the next level that we have to watch out for is the price coming down to this trend line here, which you can see on the weekly chart is this rising kind of channel or wedge pattern. If that breaks, next step down is about 2050, which is going to hit there really quick if this trend line does get broken through. So if there's any more unpriced in information, non-discounted information that hits the market, that could cause something like that to hit at 2050. Again, the larger issue here is that we have a tremendous amount of energy coiled up here and all different time frames, and that energy, just like a boiler, has got to go somewhere. So if it is not able to break out to the upside, eventually what happens is the relief valve hits and this gets dumped to the downside. Now, we have not seen a move like this in a long time, really, realistically not since 2011, about 4 years ago. Now, just because we're overdue doesn't necessarily mean anything. It all comes down to some piece of non-discounted information hitting the tape. And at the time, 4 years ago, what happened is Standard & Poor's actually downgraded the United States on a Friday afternoon after the market had shut, and it absolutely trapped everybody over the weekend, and it was a very difficult weekend. There was nothing that anybody could do about it until Sunday night, when the futures started selling off like mad. And to this day, this is why you see a lot of people getting very skittish around the weekend, because they don't want to be holding too much risk over the weekend. Okay, so until that point though, all's normal. This is just more normal price action that we've seen since the beginning of the year, with the S&P just trading in a channel range, and this is so far just a retest of that bottom range of the channel. But what happens from there, we'll see. Thanks for listening, folks. We'll see you tomorrow.